So no.
I'm happy to do oil as well too. Crikey. Okay, guys.
I don't have to dump this one on you, but last week I said I thought oil was a professional traders market. That the Cushing, Oklahoma thing was just too complicated, and that retail traders just need to be a little bit careful of oil. Do you have any idea what's happened at Cushing during the week? And do you feel this market is settling into something retail traders should be in, or do you think it's something they should be taking some care in?
Okay, all right. Let's do that, guys. I'm just going to share my screen once more. Now I've cleared all my commentaries off. Okay, so look, here we go. This is a chart. Hopefully, you guys can see this. This is a chart of WTI. It doesn't matter whether we look at WTI or Brent; they're pretty much all the same thing. And you can see how it was a quite nice trending market through September and probably half of October. Since that moment in time, since about mid-October, probably when the stock market started to move up, actually, you've had a shaky session really for the last 2 or 3 weeks in the oil market. Now, what do I mean by that? Well, if you look at some of the size of those bars compared to some of the average range of the bars in September and October, it's completely different, right? So when Paul was referring to it's really a trader's market and you need to be quite careful out there, this is what he's referring to. Crazy volatility. We went to a almost new closing high. It was a new closing high on Tuesday, up at almost $85 on WTI, and then the next day we promptly lost $4. Okay, so $4 out of 85. Those of you that are pretty good at maths will beat me to it, but that's somewhere in the region of a 5% move. Now, if you're trading Bitcoin, of course, that's basically a couple of hours work. If you're trading any other asset class in the world at that moment in time, a 5% move in a day is pretty dramatic, and that to me signifies that we're seeing, especially when you look at the previous 2 weeks of bars collectively, we're seeing significant volatility coming into market, which normally is a sign of some kind of consolidation / market top, short-term market top. So could we see the market trade down from here? I think it has to go to the point at which we find out where the real buyers are. We haven't seen that. There's been a lot of chatter, a lot of talk about deliverability of Cushing oil at the moment on the front contract. And if you look at the oil curve is very much a backwardated contract. So what I mean by backwardated, it means that the nearby months are trading higher in price than the market 12 months into the future. So if you wanted to sell your oil for December 2022, right now you get about $5 or $6 less for it than you would get today. So why would you do that? You say, no, I'll sell the oil if I have it available. I'll sell it today because it's a higher price. The reason why the market is backwardated is because they're trying to encourage people to bring oil out of storage and sell it on the open market now because there is a shortfall. Now, when you start to see this volatility pitch up, it's a sign to me when we've had such a big rally, we've got the volatility, there's talk about deliverabilities. This is like the opposite problem to the one we had all those months ago. Do you remember 18 months ago in the middle of 2020 when oil went to some crazy negative numbers? This seems to be the opposite side. Now we have a capacity problem. I know that Cushing is trading, the storage facilities are at a percentage basis very close to a low, I think, of the last 10 years in terms of the oil that's available there. So is there a direct problem? Probably not. It's going to be mitigated. I'm sure they'll find a way around it. Could there be a problem around deliverability time of oil? Yes, they could for that December contract. And then you can see that start to work its way through the system as well too. So just bear that in mind, okay? This is why Paul is making those comments, right? So move away from thinking about a trend, move into either much bigger spread stop losses where you have to give the market room to breathe, or else be very careful about your trade location, both from the buy and the sell side. This is a time to be clever about where you put it, where you put those stop losses and where you place your trade entries. It doesn't require you to hit these sort of, it doesn't matter, whatever happens, it's going to go up next week anyway camp. Right, oil might well, and I have a long-term target much higher than where we are now, but at the moment, we're not seeing that. And if you've been following what's going on in the coal market, what's going on in the natural gas market in the States, you will see the significant sell-offs in both coal and natural gas that's affecting that's affecting those markets, and that will feed into the oil market. Not directly, the correlation is less than it used to be, but there'll be some element of that coming in, and people who are taking profits in those markets or making losses, worst case, in those markets will then be looking at their positions in the oil market, saying maybe I need to book something over there to cover those losses, or I need to be more careful with my positioning. So, okay, that's what we mean. Now, having said all of that, right, where are we looking at? Well, let's take this chart out down to a weekly and see if we can get any more information out of it, right? I'm just going to squeeze this up a little bit. So we're seeing the market for the last, 1, 2, 3, 4, 5, 6, 7, 8, 9. We've had 9 weeks up, and then we've had 3 weeks down. What's interesting about that is you think about that, right? So we've had 9 weeks straight up, and now we've had 3 weeks down. What happened the last time we had 3 weeks down? We began a 9-week bull run. Try and go and look for previous analogs. Look what happened. We had 3 weeks down. Look what happened next. The market basically ground its way higher. Okay, now the seasonals. Guys, check the seasonals out for oil. This is traditionally not a very good time for oil this time of year. At some point, those seasonals turn around, but not for another month or two, right? This normally kicks off about the middle of January to the beginning of February is when the bullish seasonals kick in for oil. So right now we're in a seasonally weak period of time. However, the however to all of this is 3 weeks down. When we've seen that analog in the last couple of years, you go look for it on the charts. There's normally tended to be either flat or positive price performance after that. So now it's about trade location. This is what I'm saying to you, right? So think about trade location and where you can get involved in the marketplace, given we had a preceding 9 weeks up, which is pretty powerful. Okay, so that's what I'd be looking for here. I'd be looking for a trade entry, probably on the long side, but I need to make sure that I've got my systems in place and I've got my trade location really good. You can't afford to make a mistake. You make a mistake, you could be $3 offside within 24 hours, and that's not a good place to be. So my advice is trade location, but overall the market environment still remains at this stage positive. Bear in mind the seasonals are not positive right now, so you need to size accordingly. I hope that covers oil for you, Paul.
I thought it was brilliant, and I really do want to thank you for staying up and helping out. It's 11:15 New Zealand. Julian, I really appreciate you being here this late for us. Encourage you to get some sleep, mate, and we